Welcome to the journey of turning your 20s into a gold mine. Today, we're diving into the exhilarating world of wealth accumulation, specifically designed for those in their 20s. We'll be exploring realistic, practical strategies that can propel you towards financial freedom. So, buckle up and prepare to embark on a journey that could transform your financial future. Stay tuned to transform your financial future. Scene script. Ever heard of the eighth wonder of the world? It's compound interest. Now let's dive into understanding this magical notion. Compound interest is the interest you earn on both your original money and on the interest you continually accumulate. It's the process of your money making more money, which in turn makes even more money. Quite a money party, isn't it? Imagine this. You put $100 into a bank account with an annual interest rate of 5%. After a year, you'd have $105. That's your initial investment, or principal, plus 5% interest. Simple, right? But here's where the magic happens. In the second year, you're not just earning interest on your original $100. No, you're earning interest on $105. That's your initial investment plus the interest you earned in year one. By the end of the second year, you'd have $110.25. That extra quarter might not seem like much, but remember, you didn't do anything to earn it. It's essentially free money. Now picture this snowballing effect over 10, 20, or even 30 years. Your money would grow exponentially without you lifting a finger. That's the power of compound interest. Let's take it up a notch. Say you start investing $200 a month at age 25 with an annual interest rate of 8%. By the time you're 65, you'd have amassed over $1 million. And guess what? More than half of that money comes from interest alone. So why is it important to understand this concept? Well, it's simple. The more time your money has to compound, the more wealth it can generate. Therefore, the earlier you start, the more your money can grow. Just remember, compound interest is a long-term game. It works best when you let it run its course. So, patience is key. Start early, reap big. That's the magic of compound interest. Let money work for you while you sleep. Welcome to the world of stocks. Stocks, shares, equities, whatever you want to call them, they're more than just pieces of paper. They represent ownership in a company and a stake in its profits. Investing in stocks is like planting a seed. It might not look like much at first, but given time and the right conditions, it can grow into something substantial. But why stocks? Well, the stock market has consistently proven to be one of the most powerful wealth-building tools available. Over the long haul, it's been known to yield an average return of around 7 to 8% per year, after adjusting for inflation. That's a whole lot more than what you'd get from a savings account. Now, before you dive in headfirst, remember, the stock market isn't a get-rich-quick scheme. It's a vehicle for long-term investment. It's about buying and holding, not buying and selling. Think of it like a marathon, not a sprint. Of course, investing in stocks isn't without risks. Prices can fluctuate, companies can go bankrupt, and markets can crash. But here's the thing, historically the market has always rebounded, even from the worst downturns. So if you're patient and you stay the course, the rewards can be remarkable. Sure, you may not become the next Warren Buffett or Elon Musk overnight, but by investing in stocks, you're taking a step towards financial independence. You're giving yourself the chance to accumulate wealth over time. You're making your money work for you. So don't just let your money sit idle. Put it to work. Invest in stocks. Because when you own a piece of a company, you're not just a consumer, you're a part owner. You're not just spending money, you're making it grow. Stocks, a ticket to your financial freedom. Scene script, landlords grow rich in their sleep. Let's dive into real estate. As the saying goes, they're not making any more land. This truth is what makes real estate such a compelling investment. When you're in your 20s, real estate investment might seem intimidating, but it's one of the best ways to grow your wealth over time. Why invest in real estate, you ask? Well, for starters, it's tangible. Unlike stocks or bonds, you can touch it, you can see it, and you can add value to it. Real estate can provide a steady stream of income, especially when you rent out your property. This is what we call passive income. Picture this scenario. You're chilling on your couch, binging your favorite series, and as your favorite character delivers a witty one-liner, your bank balance increases. That's passive income. It's money that you earn without having to actively work for it. The beauty of real estate is that, as a landlord, your tenants pay down your mortgage while you sleep. Over time, this allows you to build equity in your property, which can then be leveraged into purchasing more properties. This is the power of real estate. But remember, it's not always sunshine and rainbows. Real estate requires upfront capital, and being a landlord comes with its own set of responsibilities. You'll need to deal with repairs, maintenance, and sometimes difficult tenants. But with the right mindset and strategy, these challenges are just part of the journey to financial freedom. Investing in real estate in your 20s gives you a head start. It allows you to take advantage of the compounding effect of time, which can significantly increase the value of your investment. So, how can you start? Begin by educating yourself. Read books, take online courses, and network with people who are already successful real estate investors. Save up for a down payment, find a property within your budget, and start small. Remember, Rome wasn't built in a day, and neither is wealth. Real estate, your key to passive income. Don't put all your eggs in one basket. It's time to diversify. Now you might be wondering, what on earth does diversification have to do with getting rich? Well, stick with me here. Diversification is a strategy that can help you spread out your investment risks, and potentially increase your chances of achieving more consistent returns over time. It's like playing a game of chess. You wouldn't want to put all your pieces on one square, would you? So, how does it work? Imagine you have a pie. Instead of filling the whole pie with one type of fruit, like apples, you add a mix of different fruits: apples, berries, peaches, and so on. This way, if one fruit turns out to be less than perfect, you still have other fruits that can make the pie tasty. Similarly, in investing, diversification is about spreading your capital across different types of investments, such as stocks, bonds, real estate, and possibly even commodities or cryptocurrencies. This way, if one sector or asset class performs poorly, others might do well and offset the loss. Let's talk about a few benefits of diversification. First, it can help reduce the risk. Since different investments often perform differently under varying market conditions, diversification can provide a buffer against extreme swings in the market. Second, it can potentially lead to higher returns. When you invest in a variety of assets, you're not just relying on one type of investment to do well. You're giving yourself the opportunity to benefit from different sectors and trends in the economy. Lastly, diversification can help you stay the course during market downturns. When your investments are spread out, it's easier to keep a cool head and not panic when one area of the market is performing poorly. Remember though, that diversification is not a one-size-fits-all strategy. It depends on factors like your financial goals, risk tolerance, and investment horizon. So it's crucial to do your research and possibly consult with a financial advisor to make sure your investment portfolio aligns with your personal circumstances and goals. Diversify because safety lies in variety. And remember, the aim is not just to get rich but to stay rich. Congratulations, you're now equipped with the toolbox for wealth accumulation. We've journeyed through the power of compound interest, investing in stocks, real estate, and the importance of diversification. It's time to put these strategies into action. Subscribe to our channel for more insights on building wealth. Remember, the best time to start is now.